Welcome back to the second half of the Smart Investing Show. This is when we talk about financial planning with our financial planner, Harrison Johnson of CFP. This topic here, we're not big fans of annuities. And you kind of ask the question, do commission-free annuities make annuities more attractive? So maybe we'll start selling annuities. Is that what you're saying?
So this is something that's been gaining popularity. It still makes up a very small percentage of all annuity sales. I think about 4% of annuity sales. But there are commission-free annuities out there. And some of the main issues that people have with annuities, including us, is there's a lot of internal fees in them, which can pull down performance. And there's the large commissions up front, which present a conflict of interest for the people that sell them. So they want to recommend things that earn a high commission, maybe not necessarily the best investment. So commission-free annuities attempt to address those two things. The person that sells them doesn't earn a commission, so that reduces any conflict of interest they might have. And since they're not earning a commission, the insurance companies that sponsor these things don't have to have as many fees, internal fees in the annuities themselves. So, on its face value, this looks like it could be, a better way to buy an annuity if that's something that you wanted to do. However, these types of annuities are generally sold by advisors that charge a fee for their service. So while the annuity itself might not have as much, fees going on inside of it, in addition to that, you generally now are also paying a fee to the advisor on an ongoing basis who sold that. So really, the performance, when you factor in the fee that you're paying to the advisor in the terms of like a management fee, they really come out to be very similar to traditional annuities.
And it's so funny you brought this up because just this past week, I was approached by an insurance company about this. Like, we got for advisors, no fee annuities, no surrender charge. Oh, okay, because I was thinking, if these are fixed annuities, maybe, because we're sitting on, about $100 million in cash, suppose they're using the money market at 3.5%, maybe we'll get a short-term annuity for like 4% and we can sell anytime we want to. Well, kind of dance with the guy. He's trying to sell me something. I go, no, this is what we want. Mm-hmm. Let me have this guy call you back. Guy calls me back. Oh, well, it's a variable annuity. I don't want a variable annuity. We do the investment part. So they're so salesy, and they try to avoid the question. And it's like, I still don't think this is a good idea either because you bring up the fees.
Either. Yeah, I don't either. And I mean, I don't necessarily, as a consumer sitting on the side of, an investor, I don't have a problem with whoever I'm working with making money if I get the value out of that thing that I had purchased. But the main problem that I have with annuities, whether it's commission-free or with commissions, is the underlying return, the return that you experience as an investor just isn't very good. If it had a great return and someone earns a commission, great, good for you. Right. But the way that it actually works, you just don't make a lot of money. And there's a lot of smoke and mirrors to make it look like you're making money investing in these things, but you're actually not. The income base grows at 8% a year. There's a 30% bonus that you get, guaranteed income. So annuities have guarantees, but the cost of those guarantees is low performance, essentially.
Well, I think it is interesting. I saw this article that kind of addressed this as well, and I think it was like a Jackson annuity or something.
That's the one that called me, Jackson.
They're
Jackson
one of the bigger ones, yeah.
But what they were saying was the commission-free annuity came with like 0.5% less per year in fees. Mm-hmm. But the issue is if an advisor, let's say, now is charging you 1% to manage this annuity, you'd be better off buying the commission-based annuity because you would have made, 0.5% more. So it just, to me, it comes down to buying good quality investments, not playing games with contracts. That's all an annuity is a contract, and understanding how that works. They're just so overly complicated in the long term that most people don't understand them, and it costs them in the long run. I talked to this lady last week, and she had an annuity for the last, I think, 9 years, and she has a 10-year surrender schedule, and during the last 9 years, she's made 12% total.
Not per year.
Not per year.
Total.
12% total.
Well,
and she's still locked into that annuity.
That's more than 1% per year. That's not a bad
pretty
deal.
Awesome.
Right?
And it just, I mean, Harrison, you made this point before. You look at more annuities than I do. We have never seen an annuity like, wow, that actually worked out pretty well.
Yeah.
I have not seen one yet.
Yeah, I would love to see one because, again, if it made sense, it's all just about the numbers. If it makes sense, great. I'll buy one myself and I'll recommend them to people. I still don't sell anything or earn commissions on anything. But if something made sense, then let's go ahead and do it. But when you look at what's actually happening, okay, you're buying this annuity. So you're giving money to the insurance company. And then you are, accruing value inside of this thing. And then ultimately you get money back in the terms of, surrendering it and do something else with the money, or you're getting guaranteed income. But when you look at the guaranteed income in the form of that cash flow over the rest of your life relative to the payment that you bought initially, the internal rate of return of that is generally negative to, 2-3% per year at best, which I don't know. That doesn't get me excited.
So after all your research, what you're saying is that these commission-free annuities still don't make sense. We still don't like annuities because they're smoke and mirrors.
There's smoke and mirrors. And I mean, insurance companies sell these things to make money. They have to make profit. And the reason why annuities are so complex is, well, one of the reasons why they're so complex is it allows an agent to kind of try and highlight benefits that you don't fully understand. And so that allows them to be sold and the insurance company makes money. But every insurance company has annuities that work a little bit differently, different cap rates, different participation rates, different bonuses, different, income withdrawal periods. All these things are different, but it always kind of works out to a very similar internal rate of return on the actual product, no matter what carrier you go with. And so this is the same type of thing. Well, it's not going to be commission based, but there's going to be other fees that now you're paying an insurance company and an advisor. So the net result for you is going to be very similar at the end of the day.
Right. So,
And I would almost say, in some cases, as I said, these are worse if you have an advisor than if you just would have bought it through a broker.
yeah. And this is why, again, you want a fee-based advisor like yourself that is going to give you the straight information, not try to sneak in a commission there and say, oh, there's no fees, no surrender charge, don't worry about it. No, there's always something there.
There's always something.
Yeah. Well, Harrison, thank you very much. Appreciate it.
Thanks, guys.
Again, that's Harrison Johnson. He is our financial planner. He is a CFP here at Wilsey Asset Management. He is a fee-based planner. If you want to talk to him, give him a call. I wonder if anybody listens to our radio show or podcast and they still go out and buy annuity. What do you think?
Maybe.
Good salespeople out there.
Yeah, I mean, I just, I get the bonus. Okay. It's just, again, they're giving you, it's fake money, basically.
Yeah.
I mean, it's a contract. It's not an investment. And it just drives me crazy when I see people and they get sucked into it and they hear all the great things. And then it's like, most people are like, oh, I know I shouldn't do an annuity. And then why are people doing it? I don't know.
People still do it. We do have people we talk to like, oh, I would never buy an annuity. Good. People are starting to learn. So